Hey there everyone, it's Friday, September 11th. The market's just closed about 4 o'clock Eastern Daylight Time, 3 o'clock Central Daylight Time. I just wanted to kind of brief you guys on the market conditions today. We had the dollar, as you guys know, crumble further on today. Earlier today it was about 77.1, around 9 a.m. or so, and today it's around 76.65 on the U.S. dollar exchange, USDX. There's a couple of important support points I think we should really look at. The next one is that right at 76.10 roughly, that's going to be another level of support that we could possibly bust through. I was looking at the maximum chart. This is going back, about 2 years or so, and we definitely have reversed head and shoulders, no doubt about it. The chart looks nasty, to be very honest with you. One other point that, like I mentioned, to go through is about 76.1. If we can't hold that, the next one is 71. And anything below 71 is that's it. There's nothing below. We've already very honest with you. So that's the next important point. I bring this up because I think it's important to mention too. With the falling dollar, of course, we have rising gold. Today, gold stayed above 1,000. Traders had no problems buying gold at over $1,000 per ounce. At one point, it's 1,011, and it looks like today it's settled, around $1,004 per ounce. As you all know, the equity markets have kind of maintained, really, which is very interesting. You'd think that'd be very counterintuitive. The Dow closed at about 96.05 today. Again, oil looks like about 72, which you would expect, of course, with the falling dollar. You'd expect oil to rise since it's denominated in dollars. What I think is happening here, guys, is I really think inflation is starting to take hold. If we could just if we see the dollar start to get floored around with the 71, and we see the market still holding, and that's basically telling us that the inflation is definitely starting to take hold. There's something good economically speaking, as you all know. The numbers are for everything. It's just not there. There should be no reason why the markets aren't completely tanking. Now, there are those who would argue that the plunge protection team is in full control, of course, of our friends at the Federal Reserve System, and that may be. But typically, when you have a declining dollar, rising commodities, and a very stable equities market, on a nominal terms anyway, nominally speaking, it's stable around 90, a certain level. That's pretty inflationary. That would seem to indicate that inflation is definitely starting to take hold. Certainly at 9,600, as the dollar continues to fall in real terms, as you can imagine, the Dow would be more like 9,100, 9,000. So technically, if the dollar continues to fall, technically the markets are crashing, even though in nominal terms the numbers aren't there. Technically the markets are crashing, and even in inflationary times you'll see markets increase, because there's just more dollars chasing after the same amount of shares, just like everything else. You buy a carton of milk, you have more dollars out there because of inflation chasing the same amount of products, so there's going to be price increases. That's what inflation is. So I think, again, we're going to have to watch the action next week. If the dollar does bust below 76.1 or so, I think we could definitely call this a trend, like I have been mentioning in the past few videos, to try and look for a trend in all this. Certainly below 76, I think we definitely established trend down, and if the markets hold about 9,600 or tend to increase, I think the inflation's here to stay. I don't know what else the Federal Reserve System can do at this point. You're going to start to see interest rates start to increase. Treasuries next week will be interesting. See what the interest rates are next week. But with the dollar collapsing, and investors going to require a lot more in their return, so we're going to have to pay a higher interest rate. So now our public debt is going to become more expensive for us as a nation. And with everybody losing their jobs and homes and things like that, tax revenues are going to continue to decrease. So at some point, I'm telling you, at some point, the government is not going to be able to service debt any longer. It's just the math is just not there. So then you have to ask yourself questions like, okay, why isn't the government serious about reining in spending? I mean, what's going on? Why don't they do this? Why? I mean, if you got a got a family, a husband and wife, let's say, or just two people earning an income, one person loses their job, or you kind of know when you're going to get laid off too. I used to work for a telecom company years back, and I knew when layoffs were coming, stuff like that. Did you go out and spend more money? Did you go out and buy a new car? Did you just continue the way life was before? Of course not. You cut back on spending. Well, our government sees all around what's going on. It should cut back on spending. There's going to be some painful decisions, absolutely, but they need to make it. There's no leadership in our government. So anyway, I'm getting all off topic here. I'm getting on my soapbox. I apologize. But anyway, again, let's watch the dollar for next week. I think the markets will continue around this level. If not, they may even slightly increase. And let's watch treasuries next week as well. Again, please subscribe to my videos. Tell your friends, make your own videos like I keep mentioning. Let's get this word out. Something's coming. There's no doubt about it. Please get your representatives to support H.R. 1207, which is the auditing the Federal Reserve System. I think that's extremely important. If anything, let's just get the awareness out there. Ladies and gentlemen, this is the 8th anniversary of September 11th. Let's remember those who did perish on this day. And again, hope you guys have a terrific weekend, and we'll be talking to you soon. Thanks. Bye.